Predictions are a statement of what will happen in the future or what might happen in the future. They're statements that some people make in regards to what they believe will happen in the future. They're not fact. Some people say that there's no point whatsoever trying to predict the property market. I think other people are afraid to be wrong as well. So don't be afraid. Let me know what your predictions are for 2022 and put them in the comments below. I will pick the most creative prediction for 2022 and beyond and pin it as one of the top comments. It would also be nice to see in a year's time who got the best predictions or who came up with the best predictions within the comments if we review them in a year's time as well. I'm Fleming and welcome to my channel. In this video I'm going to give 10 predictions for what I think will happen within the property market in 2022, mainly focus on the Irish market but also the worldwide trends as well, a little bit of commercial and a little bit of residential mixed in as well. These predictions are based on current economic trends and the data that's out there, as well as experience of working in the real estate industry for over 20 years. So let's get some of the basics out of the way first. When you are looking at predictions or forecasting future growth in the property market, there are kind of mainly 4 indicators that you look at first. First being GDP, interest rates, inflation, and employment growth. In lots of locations all around the world, Europe, US, GDP and employment is growing. Both point to higher property prices. Inflation is also growing, and this will add to property prices, and it will also add to demand for hedging against inflation as well. But inflation can also reduce the cash that's in the market, as well as inflation. If inflation is too high, generally speaking, central banks may step in to try curb the inflation rate by adding interest rates or increasing interest rates. This will all add to the cost of capital and will reduce the buying power of purchasers, as well as it will have an impact on prices negatively. So there are some key factors that are pointing towards prices increasing in 2022 in terms of increased GDP, increased employment, and perhaps even inflation as well. But there are other factors pointing to perhaps slight decreases in prices in terms of the risk of increased interest rates. There are also wider factors at play, including a possible stock market crash, a recession in China, which could damage confidence globally, all which could have a negative impact on property prices and reduce property prices in 2022. In terms of indicators for GDP, Ireland had an exceptional year in 2021 with a growth in GDP by 15.7%. This is extraordinary growth within 1 year, and it is also forecasted that growth within 2022 will obviously be a lot lower, but still very high from an international point of view in terms of forecast at 5.7%. A lot of the growth that happened in 2021 is definitely down to the tech and pharma companies. Obviously, tech has grown massively from an online sales point of view, and tech shares are all up. Also, from a pharmaceutical point of view, obviously we know what has happened in the last 2 years, and that has obviously resulted in massive profits for them. There also is the whole issue of a huge amount of money has been printed in Europe and in the US in the last year or two. So therefore, GDP could be inflated a little bit by the amount of money that has been printed and pushed back into the economy by the Irish government as well. However, as GDP grows, generally speaking, employment grows as well, and both of these are indicating that property prices would continue to rise in 2022. Inflation in Ireland is projected to be 3.3% in 2022. Obviously, we all know the headlines that have been floating around for the last year or so in terms of inflation being out of control globally. A lot of that has been put down to supply chain issues. However, if you look at it from some purchasing officers' reports in the last quarter, they are reporting that prices are coming down. Also, if you look at it from a European Central Bank point of view, they are forecasting that the long-term inflationary levels over a course of 3 years is still below their forecast or their target of 2%. Obviously, we have issues in the US, and while there is a risk that the Fed may increase interest rates to try curb this inflationary concerns that they have, it's also important to realize that the US will want to maintain economic growth over the next year, as well as stay competitive on the international circuit. So therefore, they won't want to damage any economic growth by pushing up interest rates too high. From a European Central Bank point of view, it's important to realize that as far as they're concerned, they're still tracking their inflationary rate at their below their 2% medium-term average. So over the course of 3 years, it's still below their annual average of 2%. Looking at it from a German point of view, they did not hit their forecast growth in Q4 of 2021, and their economy is slightly slowing. Therefore, they will not want interest rates increasing any further because it could damage any future growth that they have next year. Therefore, I see the likelihood of the European Central Bank increasing interest rates in 2022 to be slim, considering the amount of borrowings that are out there from governments. They will not want to be increasing interest rates right now within the EU area. Savings in Ireland are at a record high. Employment is growing, particularly in high-paid tech jobs. Interest rates are at the lowest in history. All this points to increasing demand. Construction costs are getting more and more expensive. Refurbishment costs are getting more and more expensive as well. And labour costs in the construction industry is getting more expensive as well. This will all impact the price of developing new homes, which will obviously have an impact on supply as well. Second-hand homeowners are getting nervous to sell because they're concerned that they won't be able to find a property to buy. This is having an impact on new supply coming onto the market. I've seen this a lot in 2021 in regards to second-hand sellers where they had gone sale agreed and backed out of deals. They backed out of deals because they couldn't find a property that they actually wanted to buy themselves, or perhaps the property that they were looking at originally had gone up in value and were no longer able to afford it and backed out of the deal. A few people have actually reached out to me to say that they actually have decided not to put their property on the market out of fear of not being able to find something to buy as well. Therefore, all of this is adding to less supply because there's a fear factor that people will not be able to buy something if they were to sell their own home. Therefore, all of this is leading to less supply on the market because there's a fear factor out there that people are concerned that if they were to go sale agreed on their house, that they will struggle to find a house that they actually want to buy themselves. This is leading to less supply coming onto the market, and right now we're at record low levels of supply on the market at the moment. Before I start with these predictions and these 10 predictions that I promised at the start of this video, hopefully I haven't waffled on too much and lost too much of your attention, but basically I wanted to set the scene in terms of where I was thinking or where my head was at in terms of making these predictions. So I will get on with these 10 predictions now, but before I do, please give the video a thumbs up and show your support for the channel. Prediction number 1, commercial offices. Commercial offices were reasonably steady in 2021, and I imagine it's going to be very similar in 2022. I'm guessing that rents will hover, in terms of prime office rents, will hover around the €57 mark per square foot. In terms of actually capital growth, I'm kind of imagining that growth will actually happen in prime office spaces, probably around the 3 or 4%. A lot of this will be due to people chasing prime investments or somewhere to put their capital, as well as a little bit of this will be inflationary linked as well. Prediction number 2, high street retail. I see further reductions in high street retail. I see capital values falling by perhaps about 5%. I see rents falling in high street locations by something similar as well. The threat from online retailers is not over. In my mind, it's just beginning, and it's going to have a long-term impact in terms of the high street retailers. I'd be quite happy if I was wrong on this one, but right now every indication is showing that high street retail is not a good investment at the moment, and therefore more and more people will shy away from it. Some retail warehousing and retail parks are showing some growth, and perhaps they will show a little bit of capital value growth in 2022. Prediction number 3, as online retail continues to grow, the demand and requirements for industrial space also continues to grow. As construction has been extremely limited over the last number of years, and a lot of older industrial locations, particularly near cities, are being held for residential development rather than any future industrial growth. All of this is leading to a real lack of supply within the industrial sector within Ireland and within Dublin. Therefore, I can see continued growth in capital values and rent. I can see rent going up about 5% and perhaps capital values going up around 8% nationally. I think Dublin perhaps won't grow as much from a capital point of view, probably around 5%. And this is mainly due to having a fantastic year in 2021 where growth was touching about 20%. So I feel that industrial will probably go up around 8% or so in terms of overall capital value growth. Prediction number 4, the build-to-rent sector will dominate headlines negatively. However, it will still be a very important sector within the property investment landscape. The introduction of stamp duty as well as rental caps may dampen some investors, and particularly some large investors who may not want the negative PR associated with some of the build-to-rent schemes that are being constructed at the moment. However, I see demand for build-to-rent to be extremely high in 2022 for a number of factors. One, investors and investment funds will be looking for secure returns for their investors and for their pension funds, and the residential sector does offer that, even if it does have rental caps. Other prime investments in other sectors in terms of office and in terms of industrial there's going to be limited opportunities to acquire prime properties in 2022. Also, retail is not offering the same returns, or perhaps has a greater risk, and therefore some of these funds will stay away from retail, and it looks at the moment that the safest bet out there is residential. So therefore a lot of funds will be looking to put their money into these build-to-rent schemes. All of this demand will result in higher capital values being achieved in 2022. However, how much that is going to go up by in terms of a percent is difficult to tell, because it's unclear exactly how the government may interfere in the market next year as well. Prediction number 5, the housing market. This is one you probably all wanted to hear about, but before I get into a prediction for 2022, let me just recap on what actually happened in 2021. Daft recently came out with a report saying that prices had increased by 7.7% on the year. However, frustratingly enough, they are only referring to asking prices, not sold prices, and they don't really distinguish them between asking prices and sold prices. My Home came out with a similar report, basically saying that asking prices had increased by 9.7%. If you've watched any of my previous videos, you will know I prefer to go off sold prices rather than asking prices. And the CSO figures, which are updated, the last update was October. Prices for the year from January to October are up 11.3%. The CSO figures are slightly behind the market. However, I think Q4 in 2021 slightly cooled off. So I'm expecting final figures for the year end to be somewhere in between 10 and 12%. So in terms of predictions for 2022, what am I actually predicting? I'm predicting that prices will actually pass out 2007 levels in 2022, and they will probably increase by about 6%. We all know that prices outside of Dublin have increased faster in the last year or so. A lot of this is due to the work from home effect. I kind of feel that that will cool off in the next year or two. Realistically, looking at the fundamentals that were there for 2021, where property prices increased by around 10%, a lot of the same fundamentals are still there in terms of large cash savings, large amount of demand, both coming from a lot of young people looking to buy as well as expats returning. There's a huge amount of demand from foreign and domestic investment companies looking to buy build-to-rent units, and none of that has changed going into 2022. Also, our GDP is still increasing, our employment is getting better. There is a risk of inflation in terms of interest rates. I can't imagine them going up this year, and even if there is a recession in somewhere like China or stock markets collapse, I think it could be a while before that actually impacts the property market in Ireland because of the lag effect. And even if it does, I still think the fundamentals are there. I believe some locations around the world will have dips or will have recessions or will have property crashes, but from an Irish point of view, the fundamentals are there that there will still be a price increase next year. Saying all that, some major disaster could happen in the stock market or China or wherever that could tumble everything down, but realistically, as I'm standing and looking or recording this and looking at this and looking at the data, I'm seeing that the likelihood is that there's a greater likelihood that prices will increase than there will be a crash. Prediction number 6, as prices continue to rise and rental caps take more of an effect and more of a hold on the private rental market, more and more private landlords will actually leave the market. This will compound problems. Existing tenants will actually stay longer within their units. Prediction number 7, development land. The likelihood is development land will remain the same or slightly reduce. Increases in build costs, global fears or global slowdown may result in developers taking fewer risks. And as developers have to look at the medium term, this could play into their decisions to buy more land. The planning system continues to be a mess and adds to developers' risks and costs. The SHD has disappeared, and there is going to be a vacant site tax as well as a rezoning tax, and there is an increase in the Part 5 from 10 to 20%. All of these are adding to development costs, which will mean that the amount that people can pay for sites is going to have to reduce. The one counter to this is if house prices continue to rise, some of the costs or some of the risks could be mitigated out, hence why perhaps development sites will remain the same. Prediction number 8, government interference in the property market will compound housing issues. Rental caps have been proven all around the world to make things worse. More people will buy into the idea that developers and property funds are the villains. More people will choose to forget the law of economics of supply and demand and that it doesn't apply to the property market. But that idea that the property market doesn't actually follow the rule of supply and demand is being peddled by people who just don't understand how they can apply that theory to the property market. I think the government are going to interfere with vacant properties. They will add a tax, or they will add a help to buy scheme for vacant properties. This is likely only going to increase the actual value of the properties and increase costs of refurbs even further as well. Prediction number 9, something is going to happen to all the retail units that are vacant at the moment. Perhaps prices may come down, allowing more business to actually occupy them, or else perhaps companies like Amazon will take units for local distribution centers, or even Amazon could take shops where there's no checkouts and are just monitored with your face and whatever you put into the basket. But I'm also still waiting for some company or some entrepreneur to start up kind of a WeWork version for the retail market, where smaller retailers can come in, or small online retailers can come in to certain locations around the world. Prediction number 10, China. I'm kind of sick of hearing it, and I think everyone's heard of Evergrande by now, and the likelihood is China will suffer property crash and may go into recession. However, it's probably important to realize that China doesn't quite act like the rest of the world do in these circumstances. 1, China are a communist state. 2, China were already attacking businesses and wanted them to separate because they felt that they were getting too big for their own good and were actually challenging the state rule. So therefore, in the last few years, China has attacked a number of big companies, and they were starting to go after big developers as well. So the fact that they're failing probably won't be any major concern to the Chinese government. It will be concerned that if it impacts their economy, but in terms of the actual individuals or those companies, I don't think they'll be overly concerned. It's important to realize in China as well that China own all the land in China, and developers have to lease the properties or lease the plots off them to build. So therefore, China may look at it a lot differently in terms of when they take back some of these properties, or they let some of these property development companies fail. China also don't have to worry about all these first-time buyers who are missing out from a voting point of view. They're not concerned about an election next year or concerned about them voting, because they are in a communist state. It's running a little bit different than the rest of us know. So therefore, they think about things a lot differently than perhaps our governments will think about, because they don't have to worry about a vote. Unlike the US or Ireland in the last recession in terms of cash reserves, China actually have one of the biggest cash reserves on the planet right now. So therefore, if something does happen, they're not going out to the bond market looking for cash. They have huge amounts of cash. They have trillions of cash on reserve that they can use to try tackle any recession that may actually occur. They don't have to go out to markets to borrow. I don't know enough about the stock market to predict a crash or a growth in 2022, but what I will say, just looking at it from a property point of view, a lot of the indicators: increased GDP, low interest rates, inflation, high employment, as well as a growing population, large savings, increased costs of construction, increased costs of labor. All of these factors point to increased demand and a limited supply, which all point to higher prices next year in 22 in terms of housing growth. Assuming China doesn't absolutely implode, and assuming the stock market doesn't implode either, everything else is pointing to increased growth next year. If you share that view or have a completely different view, please put your comments below. If you want to make any predictions of your own or have any comments on any of the predictions that I've made in this video, please put your comments below. And as always, please support the channel by giving it a big thumbs up. Happy New Year's to everyone, and make sure you subscribe to the channel.